So we were kind of looking to Cisco as an indicator of corporate spending demand here. Just give us your sort of big picture takeaways, first of all.
Absolutely, and thank you for having me on. Really, Cisco's results came in roughly in line with our expectations across the board. As you mentioned before the break, networking really continues to be the primary driver of the business here. And Cisco has been talking for a few quarters now about slower spending at customers. We're digesting orders that ended up being a little bit excessive in the years following the COVID pandemic, really in 2022. And so we've been calling this a bit of a COVID hangover, if you will, for that networking demand. We think it'll come back in 2025, but probably another quarter or so here of that weakness. Now, on the positive side, Cisco did close on its acquisition of Splunk. That gave some upside to figures in the quarter. They got about half a quarter of contribution from Splunk. And we really see the full year guidance raise being wholly attributed to having Splunk in the door now. The guidance that they actually lowered last quarter excluded Splunk, so it fit with our expectations with Splunk now part of the portfolio.
William, let's say you're on this conference call coming up here and you have the chance to ask CEO Chuck Robbins a few questions. What would you ask him, William? What would be top of mind?
I think top of mind for us right now is, buying Splunk is great and getting that inorganic growth, but Cisco's organic security and observability businesses have been underperforming peers and the broader cybersecurity market for a few years now. So really the key that we're looking at in those businesses is now that they have Splunk in the portfolio, can they augment that organic growth rather than just continuing to buy assets?
And do you think they're going to be able to do that?
A little bit. Maybe not as much as a lot of investors would like. We like Splunk standalone before being bought by Cisco. We think it's a really good fit for the portfolio. So we do model that organic growth coming more in line with the market, maybe not gaining share, but at least staving off those share losses.
And William, on this call, it's a good bet Chuck Robbins is going to talk about AI and AI orders. Do you consider, William, as a financial analyst covering the company, do you consider Cisco a smart AI play for investors?
We think it has a good AI opportunity, but it pales in comparison to the size of the business, really. So we're expecting about $1 billion in AI sales for Cisco in fiscal 2025, which will start here in the second half of calendar 2024. And so that's a big number, but against a roughly $50 billion top line, we don't think it'll be a significant contributor to overall firm results in the medium term. We actually like, a networking peer like Arista Networks a lot better as an AI play, a little bit more highly concentrated in high-speed data center networking, and better play on the AI trend for networking in our view.
The other thing that, with regard to Splunk that they mentioned is that the former CEO of that company is going to be the president of what they call GoToMarket inside Cisco. Was that the right move to keep on Gary Steele and integrate him into that kind of a role?
Yes, we like keeping on Gary Steele, and we think, the title president of GoToMarket makes a lot of sense. Again, talking about these, relative underperformers in security and observability for Cisco. We think GoToMarket is really the key lever to pull there in terms of what to improve to get those back up towards growth more in line with peers.